Lost connection. All right. Good morning, traders. Shawn Lucas here with the Apiary Fund. One of the best ways to protect your assets and your wealth is to diversify. And sometimes, especially in a market like we have right now, one of the best ways to diversify your assets is to sort of look outside the box. And that's what we're going to talk about today. Is we're going to look at different ways. We're going to talk about three worlds colliding. We've got the old world where we have gold, who reigns supreme, and we have the current world where dollars and U.S. dollars and the petrodollar sort of reign supreme, and then we have the future world, sort of this Bitcoin, this cryptocurrency world. And it's now vying for a piece of that kingdom. And so we're going to talk a little bit today about, what should be in your wallet. And for those of you who don't know me, I'm Shawn Lucas. I'm the head trader for the Apiary Fund. And I help people learn how to trade. And, but I do it in a way that's kind of different than than you might expect. The Apiary Fund is a fund where we bring regular traders in, traders who want to learn how to develop risk management skills and portfolio management skills, and we put them in front of a real asset, in front of real assets, and we help them, we train them, show them how to manage money in live market conditions. So you come in, you trade the fund real time with real money, and in real market conditions, and that's sort of what happens here at the Apiary Fund. So I noticed some of you are hitting the like button. I appreciate that. Really appreciate that. Any kind of feedback, it helps me kind of know that you're there and that you're listening, and also comments. I love comments. Facebook Live is something that will, we record it right now. It's live right now, but in the future, you can come back and watch this, and it'll be on the Facebook post. And so even if it's after this Facebook Live and you're watching this, the recording of this, put your comments in the field below the video here. Because we'll come back and address any questions that you have, throughout the week or the coming weeks. So make sure that you put comments in there, and we'll be sure to come back and address any questions that you have. I'm wearing the hat. Like the hat. This is my trading hat. This is I like to trade in this hat. Some people have lucky socks, right? I have a lucky hat, and anyway, I thought that I'd put the hat on for today's first Facebook Live. So diving into it, like I said earlier, we're going to discuss a couple of important financial concepts. Typically we are discussing trading at Apiary Fund. We get into a lot of the mechanics of how trading works, and trading is really sort of a what's in it for me now. We're trading for income. We're trading to help build our wealth. Today's discussion, however, we're going to talk a little bit broader strokes. We're going to talk about gold and dollars and Bitcoin and kind of what is the relationship. It's kind of a hornet's nest of it's kind of a controversy in the financial industry right now. A lot of old school traders are saying, hey, gold's the way to diversify your wealth, and a lot of new traders are saying, hey, Bitcoin, it's all about Bitcoin. It's all about cryptocurrencies. And so, and then meanwhile, those who don't know are just sitting there in dollars. But I want to illustrate, if I could, why it's so important that we consider and look at, why we ask the question, should I be in gold, should I be in dollars, or should I be in something else like a cryptocurrency? And I'm going to share a story. I I have a good friend. He's a CFO for a large company. They transact business all over the world. So he's constantly, looking at at exchanging currencies from one currency to another. Say they do a deal in London, how do they get that? They exchange product, how they get that money back into the United States and back into dollars. So we chat often about currency exchange. I appreciate sort of his insight, and he has a really good grasp on the business climate, which is important. But we were talking one day, I asked him the question. I'm like, why? You're always looking to put, to exchange your foreign reserves, your foreign assets into U.S. dollars. And I was like, why do you always do that? Why don't you manage that a little bit better? Diversify your portfolio. He's like, what? No, diversification. I know diversification. Why would I hold on to these foreign currencies when nothing is as valuable as the US dollar? And I was like, well, yeah, I get that. Right now, dollar is supreme. And yes, you want to hold your assets, especially your company assets, in dollars, because it's been the proven currency for years and years and years. I said, but what about the day when the dollar isn't supreme? And he's like, well, what do you mean? And I'm like, well, consider the idea that, all of a sudden the dollar isn't the strongest currency in the world. What do you do then? And how do you diversify your assets? And he's like, well, we diversify our assets. We have investment portfolio where we invest in other businesses. He's like, obviously we have a real estate portfolio, where we diversify into real estate. And we also have, a significant savings account to help protect against different valuation changes. And I was like, well, that's good. Yes, you are diversified. You've got all these other financial instruments and financial assets that are diversifying your portfolio. But what about if the dollar tanks? Like, what if the dollar depreciates, by 50%, 25%? That can happen. And he's like, well, I get that. I'm like, what happens to your real estate portfolio? He's like, oh, well, it's denominated in US dollars, so I suppose the real estate value, the relative purchasing power of the value of that real estate would go down. I was like, and your savings account, yes, that would go down. And your stock portfolio, yes, that would go down. And I was like, well, doesn't it make sense then to diversify into other assets? And particularly, how do you diversify against fluctuations in the U.S. dollar? Now, we haven't, in our lifetimes, we haven't really known a world that hasn't been strong U.S. dollar, right? I mean, we'd have to go back all the way back to the mid 1930s when the British pound was actually the reserve currency to start to understand. At least in America, we'd have to go all the way back to that environment to understand what the world would be like if the dollar wasn't the reserve currency. And that's what, that's important if we're looking to protect our assets, because the fact is that a single currency does not or has not maintained strength for much more than a century in the entire history of the world. You look at right now in the 20th century, it's the US dollar that's the king, that's the reserve currency. In 19th century, it was the British pound. In the 18th century, it was the Spanish real. In the 17th century, Netherlands was the reserve currency, the gulden. 16th century, it was the Florence fiorino. And so that continual, there's constantly an ebb and a flow to the currency, right? So I'm going to try doing something real quick. And so I'm going to try drawing here on the screen. Let's see if this works. I want your feedback if you can see this working, if this is working. So if we've got the 16th, 17th, 18th, 19th, and 20th, and you have this cycle where currency value goes up, and then it's replaced by another one, and then another one, and these currencies go down like this. So you constantly get new currencies in an up phase. Is that working? Can everybody see that okay? Oh, sweet. Awesome. Hey, this is cool. I'm drawing on my phone. So anyway, you see this environment where a new currency comes up in value over a century period of time. It peaks out, and then it slowly erodes value. So this might be the British pound that I drew here. This would be the sort of the Spanish real in the 18th century, establishing its credibility in the market, and then throughout the next 50, 60 years, it starts to erode value. And so you constantly see this replacement process in reserve currencies. Now let's see if I can erase all of that. Oh, there we go. Very cool. And how do I get back? There we go. All right, so anyway, the point is that, hey, the US dollar, since about 1913, has established a presence as the global reserve currency. You know, that process started back in the 1913s with the establishment of the Federal Reserve, and has strengthened and really took a fever pitch in the 1970s with the petrodollar deal with Saudi Arabia. So anyway, so what we're seeing right now is we're seeing the apex right now of the U.S. dollar. We're seeing that U.S. dollar in all of the history of the U.S. dollar right now is sort of its climax. It's at a high point. And what we will tend to see if this pattern, this 100-year pattern of currencies continues to play out into the future, what we're going to start to see is the U.S. dollar start to lose its strength and lose its position as the global reserve currency. And in fact, even today, we're already starting to see the first shots in that war against the U.S. dollar. China has come out recently and said, hey, look, we're going to offer an alternative to processing transactions in U.S. dollars, oil transactions. Now you can come in, you can trade all of your oil in Chinese yuan, and you don't have to use the dollar. You can use the yuan. So China is already buying for position at the table. It's yuan at a position at the table for global currency dominance, right? You have the U.S. dollar, which came off the gold standard. Now, up until the 1970s, the currencies were backed by assets, right? 1970s, Bretton Woods Accord, changed all of that, and the government said, hey, look, we're going to allow the currency to float in the open market, which is good for a currency on one hand, but it's bad on the other hand because you don't have anything backing it except for the full faith and confidence that you have in the government that issues it. That's why it's called fiat. And so, as long as the government is maintaining good fiscal responsibility, as long as they're spending and they're collecting and spending their money efficiently, then obviously the currency is going to strengthen, right? If the government starts to spend more money than it brings in, and like we've seen so often, if we start to see the government be less responsible financially, then that also creates a reason for another stronger currency to come in and compete with that reserve currency. And so we're seeing that. I mean, debts are at all-time highs right now in the U.S. dollar. Fiscal management, our liabilities are growing faster. Our liabilities are growing faster than our revenue generation, even though the IRS and the tax collection system is bringing in more money. We're promising that money faster than we're bringing it in. So there's reasons for the U.S. dollar to start to. There's reasons for us to believe that we're starting to peak out on that U.S. dollar, and I think that's one. That's important if we're looking at preserving wealth, right? Then we ought to consider at least the fact that the U.S. dollar may not be the reserve currency 50 years from now. Now, these are slow processes. They don't happen overnight. It's not like you wake up one morning and the U.S. dollar is all of a sudden, the weak currency in the world. That's not going to happen. It's going to happen slowly over the period of 5, 10, 15, 20 years. And that makes it difficult for people like you and I to plan and adjust and prepare for that shift. But I can promise you one thing is that will happen in the future, and we will see that, we will start to see that shift in the next 20, 30 years. Big if, right? But big if that 100-year cycle continues. So what do? We've got the old world where everything is based on assets. That's the gold mentality. That's the precious metals. No matter what currency is being issued, you can always rely on gold and metals. You got the new world where everything is in dollars, and we love the dollar. We put all of our assets denominated in the dollar, and we sort of have this new world where we're introducing new technology, a new alternative to both of those realms with the Bitcoin and the cryptocurrency. Now, this is new, right? We haven't. Well, I guess there have been in the past alternative currencies, particularly back in the Depression era when companies used to issue wooden nickels or something along those lines. They would agree to transact businesses in currency that wasn't the country's primary currency. So these phenomenons happen occasionally throughout history, and the cryptocurrency it's a new technology. It's something new, and so it's relatively early in the development cycle. Right now, we had early adopter phase, back in the early 2000s. We're starting to see more acceptance. We're starting to see more and more people are accepting of this Bitcoin technology, this cryptocurrency technology. And so where does that future take you? And that's the big question right now. And this is why there's such a big argument in the industry or in the financial space. Are we looking at a fundamental shift in currency? Are we looking to shift into this new idea, this new technology? Is it going to overcome the fiat paper money, government-backed issued money that we see? And there's a lot of questions. There's a lot of risk. I don't know that governments will allow that growth to take place naturally without coming in and regulating it, number one. So in the future, you're going to see much, much more regulation in the cryptocurrencies than you see right now. Number two, there's a big question about the security. On the one hand, they say cryptocurrencies are very secure because they're not, you can't go open up a printing press and print new cryptocurrency, right? There's this technology in place that makes it difficult because of the blockchain structure to duplicate it or to counterfeit it. But on the other hand, it's all digital assets. So what happens if, you know, someone breaks the code, so to speak, and then all of a sudden all your assets are at risk. So very early in the cryptocurrency stage. So now let's look at gold. You know, is gold an alternative to the dollar? And absolutely, gold is absolutely, it has been and always is and always has been an alternative to fiat currency. And it will probably continue to be that way into the future. But gold has its own, you know, challenges. Governments can come in like they did back in the 1930s and outlaw gold, right? All of a sudden, one day, they say you can't hold gold. We've tried that in India recently. They've tried it in other countries, and so there's exposure there. So if you look at the environment that we're in right now, right? We've got a dollar that's at an apex. It's at its highs. You've got a new emerging currency that has a lot of promise, but very, very untested. And then you have this old relic of a financial instrument in a precious metal. And the question is how do you allocate your wealth? You know, we know from our CFO friend that we need to consider at least an allocation. We need to consider at least how to diversify outside of our exposure to the US dollar. That's a given. We know we need to do that. If we're going to be smart about our finances, we need to allocate outside of the dollar. But then where do you put that money? Do you put it into gold? Do you put it into cryptocurrencies? You know, where and what is the percentages that you ought to diversify? And this is a question that we've had at the Apiary Fund. You know, we sit here on top of a significant financial asset, money that's being managed. And we're diversified in the fact that we have, you know, at any given time, we have a chunk in the euro. At any given time, we have a chunk in the British pound and in the Japanese yen. So we have this money, we have diversification, but it's all diversified in fiat currencies, right? These are currencies that are issued by the governments. And so are we really diversified? All of our money is in fiat currency. So there is an element of diversification that even the fund needs to do. And so we've already looked at that situation, and for the last, you know, last few years, we've started allocating a portion of our assets into the old relic, right? The gold and silver. And that's in order to diversify and to protect the assets in the fund. So now, if we have across the board, imagine two competing worlds, right? On the one hand, we have the value. Man, I look like a bear. Okay, so on the one hand, we have all these currencies, right? And they're going to go up and down across the board. You'll get some movement from one currency into another. But collectively, these currencies, all the governments across the board are starting to, they coordinate their movement. So, right? So they're starting to act, instead of as independent pieces, they're starting to act as a conglomerate. All the central banks get together and they talk about, you know, what are we going to do? How are we going to manage this? And then over here, you have the countermeasure in an opposite currency. So as the value of these currencies rise, you know, the value of the gold or the silver tends to drop. But if the reverse happens, and if collectively governments start to be fiscally irresponsible, then what you're going to see is you're going to see the collective value of currencies, fiat currencies, drop, and you're going to start to see gold and other alternatives like Bitcoin go up in value. So Apiary Fund then, because of that reason, Apiary Fund has already diversified its portfolio into hard assets, into gold and silver. And in addition to that, right now, we're already looking at other ways of diversifying. We're looking at where does this new technology take us into the future, and we will be adjusting our portfolio based on our projections and our analysis of the industry moving forward. So I hope that's been helpful. I hope that this little discussion has been something that will help you think about your own situation. You know, we don't want to, it's hard because, you know, as we're looking at, at your house, you know, you're looking at your financial assets. And yes, your house is continuing to go up in value. Yes, you're not making much return in your bank account, but it's, you know, it's going up in value. And it's not going down in value. You don't see that value starting to erode and starting to influence your personal wealth. But trust me, it's happening. Even though you can't see it, it's happening. There's a reason why the real estate's going up. And that's because it's trying to compensate for the increase money supply in the world right now. So at any rate, I hope that this has been helpful. You know, you can make these decisions on your own. You can look at your own situation and you can start to say, okay, yes, it's pertinent that I start to diversify into some of these other assets. It's appropriate to take a little bit of your financial wealth and allocate it to gold. It will be a good hedge in certain environments. It's appropriate to take a little bit and put it into, you know, new technology. New technology, man, you catch the growth cycle on new technology and you can come out very, very well. So now is the time to start to consider this question about how do you allocate your wealth across these different instruments. Apiary Fund, we're announcing today, we just sent out a press release announcing that we're now offering precious metals. We're offering bullion to our traders. So Apiary Fund, Apiary Fund already trades in the paper assets, right? We can buy and sell gold and silver inside the fund, but they're paper assets. They're fiat gold, right? There's nothing backing that gold. But now you can actually buy and sell physical gold and silver from the Apiary Fund. So we are now a dealer, a bullion dealer in the precious metals in the precious metals industry. Apiary Fund will hold inventory, we'll buy for our own inventory, and we'll sell from our own inventory coins, bullion, and any of our traders will be able to enjoy, you know, a reduced rate on gold and silver. So if you're interested in allocating a little bit of your portfolio to gold or silver, simply contact Apiary Fund. And we'll be able to send physically, ship in the gold or silver bullion to you, physical, not paper. Anyway, that's it for me, folks. It's so great to be with you. Let me see how many people we have. Let's see a big comment field, or not comment. A lot of, there you go. Like it, love it, wow it, and any wows. We have wows out there. There we go. Got a wow. Love it. Hey, thank you. All right. Well, hey, it's been great to be with you today, and we look forward to this being a thing. We're going to try and do a Facebook Live, sort of this little trader financial chat every Thursday morning after our trading room. So, you know, mark off on your calendar. Come join us next Thursday, same time, as we talk about another financial topic. So great to be with you today, and wish you all the best of success in your finances, and look forward to trading with you in the fun. Thanks, everybody.